Tesla is set to open at lows not seen since late 2016 as Morgan Stanley cuts its worst-case scenario for the automaker shares to $10 a share from $97, driven primarily by concerns around Chinese demand for Tesla products. However, the firm's price target for the stock does remain at $230, and they do have an equal weight rating, Jim. Adam Jonas at it again, arguing that they've essentially saturated the market for retail EVs and are too big, really, to support anything but the fundamentals at this point.
Yeah, this is the demand problem issue that they say demand's at the heart of the problem. You know, look, I don't know. Can you really have your I question this piece of research. I mean, on the one hand, he's talking about $10. On the other hand, he's talking about a much higher price. On the one hand, he's saying, listen, there's a real issue here. On the other hand, they're just part of the underwriting. Boy, by the way, the 2025 bonds are down to 82. What's really a shame here is that Elon Musk's tongue has been tied by the SEC, because he typically would come out right about now and say demand is strong. Right, David? I mean, wouldn't he be saying demand is strong?
He might be saying something that would at least get people excited. He'd figure something out. He already went with a million robo-taxis by end of 2020. So he went with that one. So he's got to figure out a new one. I don't know what it will be.
Does he have wiggle room on that?
They successfully raised that money, though, Jim. They successfully raised through the convertible and the straight equity. And there is an anticipation if they needed to, they could again, but they are not funding obviously, right now through free cash flow, not able to fund the company because they're not generating it at this point. This guy Jonas talks a lot about China, too, though, being a really important market for them, where I know they're trying to actually build production as well so they don't face the import duties.
No, this is a pivot issue. I mean, they really, talking about Chinese demand, is really that's the piece, because that could cure the demand situation. But, you know, I come back to the idea that he's talking about that the money they raise won't last that long. So how much are they really burning? And that's why you would love to hear a little deflection, because if they're burning that fast, I think you feel like I'm kind of a chump if you bought that bond. I mean, Morgan Stanley, they merchandise it. I find it sometimes very difficult to have the corporate finance guys say, hey, this is great, and then the analysts say $10. $10. I mean, I don't know.
Yeah. The 2025 bonds are yielding about 9.14 now. And they do. I mean, his assumption, Jim, is that they missed the China volume forecast by about half.
Yeah. Look, I don't know. I mean, maybe he's got the first man's good. Maybe it's a Richard Pryor situation. Remember the first man on the sun was hopping around there? I mean, honestly, they needed to do something quickly. And that was the first man on the sun was one of the greatest bits. They need to do something very quickly to be able to say, we have other irons in the fire, because if this is just going to be a bleed issue, I have to tell you, it was a sucker punch, that bond. I mean, everybody liked it until the bond. Baird came out and said negative things today.
Yeah, but I don't know.
How did this happen?
I don't know. They don't wander into these things. I mean, listen, you can do math. What Jonas has, where he has them at $13.3 billion total debt as of second quarter 19, ending this year with about 5.5 times net debt to EBITDA ratio.
On a $35
and getting that
billion
down by over half,
market
actually,
cap
by the end of 2020.
I think the auto component he sees at about $185, and he's assuming almost 350,000 deliveries. So they have to get these cars off the line.
But what's the price they're going to be getting for them, too, is a key question, right? They make money at 50. They don't make money at 35,000.
No. I mean, there's a demand issue. But what I find specious here is the $10 price target. I mean, like a Hamilton. I mean, it's a Hamilton story. I mean, it really is insane. He picks 10. How about 8? How about 12? I mean, 10 just basically says, we're going to get talked about on Squawk in the Street, and I want to get talked about. Let's talk about me. So there, we just talked about him. I mean, if he had done like 47, would we talk about him? No, but 10. 10's right in your face, and that's the problem. $10, you can't be a hold and have a $10 bear case.
It is part of the quirk of Morgan Stanley research in particular that these bear cases get a lot of attention.